All right, well, let's go ahead and dive in. Thank you, everyone, for joining us here today. So we are going to attempt to make sense of the chaos, and it is certainly a chaotic world out there with what is going on with the pandemic that we're currently facing, as well as the tremendous impact that we are seeing on small businesses throughout the country. What we're going to try and do today, and I want to touch on this in a few fronts, is it's very important to realize that information is moving incredibly fast. I'm not going to sit here and tell you we have all the answers. What we've tried to do is isolate as many key facts as possible right now. This is only as current as the information that is literally hot off the presses right now. And I think the goal, and what I would encourage of you, and certainly what we've tried to do, is just get as educated as possible, as quickly as possible, to try to tie what is happening out there in the market with what you can do about it, and what small businesses can do about it, because clearly standing still is equivalent to death at this point. The other thing that I want to point out up front is that there is, and this is extremely important, there is no one-size-fits-all solution to this. There's not one silver bullet. There are a lot of nuances to all the different programs and options and conversations that are to be had and that are out there. And so the goal today is really to equip with as much relevant information as possible, what some actionable steps are that you can take, and also the right questions to ask. So that's really what we're trying to accomplish. So what we're going to do, we'll start with just a bit of an overall high-level update on some important facts from a little bit more of a macro perspective. We'll talk, and I know this is going to be a topic of conversation for many folks in particular, is just the different relief options that are out there, and also the impact on small business. A little bit of what lenders are doing, and this is something, again, that we see from our perch interacting with businesses on Main Street every day, what is happening out there in the lending community and what to expect. Finally, some best practices and tips and some actionable actions that you can take, or the small businesses can take going forward. And then lastly, we should have some good time here for Q&A before we wrap. So diving in, first off, the big picture. And I think one very important point for everyone to realize is you may have heard the term black swan. It's something unpredictable that pops up. I'm not an economist. I'm not a scientist, but I'm going to give you some big picture information on what we see, because a lot of this is very important for context. So we have actually a double whammy right now of black swan events, and that is important to note. It's not just COVID-19, this pandemic that is definitely a threat to our healthcare system, and clearly has had some very detrimental impacts on our economy, but also what is happening with oil prices, with this war with Saudi Arabia and Russia that are driving oil prices to unseen lows. Both of those matter, and it's important that we pay attention to both of them, and it is unquestioned that what is happening in the economy right now is a result of not just one, but both of those things at the same time. Now, consumer and business health, and I think this is one thing, it's easy at times to get very caught up on what all is occurring, and get into a little bit of a panic mode. I think one thing that is very important, and you can talk to a lot of different economists about this, we've certainly done our research and pay attention to a large group of economists. This is not the Great Recession. This is not the dot-com bubble of the early 2000s. This is not going back to some of the economic catastrophes of the 20th century either. The consumer and businesses were both in a healthier place going into this economic shock than they have been in prior economic crises. And what that means is it's always better to go into these kinds of things from a position of strength than a position of weakness. In the Great Recession, the consumer, for example, was underwater on their mortgages to begin with, and then the economic collapse came on top of that. A healthier consumer, a healthier business is far better able to weather the storm than if the vast majority of those same consumers and businesses were sick. So again, important context on what a rebound might look like and the potential for it. And I thought something that was very interesting is actually the chair of the Fed in St. Louis used a very good analogy over the past week, where he said, right now, the consumer, in somewhat of an analogy for our economy overall, think of driving on the freeway in your car at 65, 75 miles per hour, and there's a construction zone up ahead. That car's got to slow down. That car's got to maybe navigate some twists and turns to get around that construction and possibly even come to a halt. But it's temporary, and there's nothing wrong with the engine. That car will speed up again. It's just not going to get from 0 to 60 in 2 seconds. And I think that is a very good analogy for where we're at right now. And overall, the consumer really does drive that economy. So that's one important piece that I'm going to share. Is something really to keep a close eye on, is what happens with the consumer as time goes on. And we'll talk about that a little bit further. But clearly right now, consumer spending, it's very heavily driven by hoarding. And consumers are buying goods that they haven't bought before because of the simple fact that for 3/4 of the country, most consumers are bound to their homes. That is expected to return to normal levels. When is the ultimate question. One other point to make, and words get thrown around a lot. Technically, the U.S. economy is in a recession. The global economy is probably in a recession. But it could also be an incredibly quick recession. So the simple fact that word shouldn't bring fear, shouldn't really cause any more panic than there already is. You hear that thrown a lot, and there's a lot of sensationalized media and words thrown around sometimes. It is what it is. It doesn't mean, again, that we're going back to the Great Recession that so many of us remember, 10 plus years ago. One other important point is that China is expected to be at 90% capacity within 5 to 6 weeks. You are already seeing supply chains coming back online. There's going to be a lag. And actually, some economic news was released out of China and their manufacturing sector, I believe, earlier today, that actually bettered a lot of economic forecasts. So China's coming back online. I think that's important context overall. Again, it's going to affect a lot of different businesses differently, but the world would be in a far tougher spot if China was taking a long time to rebound as well. Now, let's talk a little bit just on COVID-19. And again, I am not a scientist. I'm not going to pretend to be. What I'm going to share is, I think, just some important facts in looking at some raw data. So number one, in the U.S., we know we've got hot spots here. It's been pretty consistent since testing has been widespread that on a national basis, about 14 to 16% of those tested are coming back positive, which means somewhere between 84 and 86% are not. In Arizona, that rate is actually much better. We're only getting positive rates of about 7%, which means 93% of those tests are coming back negative. So while this is widespread, that tells you that a lot of people that are showing symptoms do not actually have the virus, which again is encouraging. I think a couple other points. The mortality rate. The mortality rate in the U.S. is 1.5%. In Italy, it's over 10. In Spain, it's over 7.5. And there was actually news out of Italy today that for the first time, they are actually seeing declines. That their infection rate is going up, but it is now going up at a declining rate. So that may mean everybody's talking about this curve. That may mean that they're starting to be on the other side of that curve. That would certainly be good news. And there's actually some news out of New York, same thing. They're still seeing, obviously, more cases, and that will continue, but they're not accelerating at the rate that they once were. Now, there's over 400 clinical trials currently in process, which again, and that's from vaccines to medication, which tells you that the scientific community is working on ways to treat as well as possibly stem and then even prevent the widespread effects of this virus. Because the one thing we don't know, it could come back. This could be something that's with us like flu. But if there's treatments in place, and that's one of the things that clearly the overall markets have been struggling to react to, is without treatments, it poses us a major risk, major problem, major challenge that we've got to make sure we're able to contend with. The last point I want to make in this, and if you actually talk to a number of economists, now they will absolutely tell you that the impact of this COVID pandemic are sizable and material to our economy. But in the long view, they are far more worried about oil prices than they are this pandemic. So again, a reason not to lose sight of oil in light of everything else that's going on, and with our economy, the energy independence that we've been striving for in the United States, so many industries that there's a trickle down effect due to oil. It is a very important thing to watch as time goes on. So a couple things just to watch for, and then we'll get into some specifics around relief. One is, I heard a great line the other day that my 401k is now a 101k, and I think we've all certainly felt the brunt of that. But the stock market alone, and I've had a couple CEOs that I've talked to, start calls with to just see what happened to the stock market today. The stock market is not a direct rational parallel to what's going on in the underlying economy, and certainly what's going on to businesses on Main Street. It's not something that's necessarily going to be a indicator of the past, present, or future. Is it out there? Is it something that affects us? Absolutely. But just because the market goes down and goes down big does not underlyingly signal anything in the underlying economy. So just something I just point out as a bit of caution there. Couple key things is, and I brought this up with the consumer, watch the consumer trends very, very closely. There are economists that are saying the peak decline will probably be in April. So we're going to see, again, some damage done in April as the full effects of some of these shelter in place orders and really the continued shutdown of many businesses. But if those place orders do not get more draconian, if there's not further measures taken, there are very good expectations that we could see that consumer spending rebound in May or June. If some of that drags a little bit longer, it could potentially be June, July. But the important thing is there is a full expectation that consumer is going to bounce back, which is good news for our overall economy. It's just a question of when. And so not only watching the macro consumer trends, but also what are those consumers starting to buy? Because depending on the businesses that you're involved with, it may matter. And certainly some businesses, I know there's been talk aerospace and just the airline industry in general, it may take a little bit longer to recover. So being mindful of that, and again, where the consumer is spending money. Same thing, there's some concern that the lag with the auto industry could take a little bit longer. Whereas certain consumables, certainly spending on restaurants and other things are expected to snap back. It's just a question to what levels. I brought up oil prices, again, something to watch. If oil stays where it is throughout the rest of the year, that could be an indication of some broader problems. And again, maybe not an overnight shock, but that would definitely be an indication that the underlying health of our economy is still a bit fragile. So even if we come out and rebound out of this COVID pandemic, best case scenario occurs, we're able to flatten the curve, and oil prices still lag, that is likely still to have some downward pressure. So just because we quote unquote beat COVID, that doesn't mean we've solved everything, and something really mindful of. The other thing that I'll point out, and a number of economists have spoken about this as well, is they were foreseeing some periods of slower growth coming up for the United States in the next few years. The sharp and immediate impact of what has happened with this COVID pandemic and the oil price war is that there has been and will continue to be something of a culling of the herd. I brought up the health of consumers, the health of businesses. A business that was not healthy coming into this economic shock may not make it. And that in itself could present some very good economic opportunities for other businesses, where maybe picking up slack from a customer perspective, or maybe having opportunities to grow. So in all likelihood, and probably there already are businesses that have closed that will not reopen, that is likely to continue. It's unfortunate, but it also is part of the overall economic cycle, and where that occurs, there's going to be opportunity on the other side. So let me jump into something that obviously has been very near and dear to a lot of people's hearts, and that's the various relief programs that are out there. And I think I cannot stress this enough, because this is extremely important. One piece of this is there has been so much information disseminated and so much misinformation disseminated. In my position, I probably get 10 to 12 inquiries a day about the various things that have been going on. This has been over the last couple of weeks that are not accurate. People telling, I hear I'm eligible for this, or I heard about this program, heard about that, I got this from so-and-so. I would caution everybody to be extremely careful right now, because even some of the programs that have been rolled out, we still don't fully understand all the impacts. And I'll talk about that more in a second, or some of the after effects of some of that. So the ink is by no means dry on a lot of what's out there. And I had a banker tell me yesterday, anybody who comes to you and says they've got it figured out is 100% wrong. So if anybody does, be cautious on that. I think I can't stress that enough. And right now we have programs out there from the Treasury. We have programs that are involving the Federal Reserve. We have programs involving the SBA. Until there are firm, hard and fast guidelines out there, a lot of people are getting out ahead of things, trying to be proactive, trying to collect information, trying to state what they think, may happen. But there is still a lot of room for interpretation in a lot of these different programs that have been put out there. And it's very important to get the black and white answers, because there are some key limitations, potentially missing a window, potentially, exploring this program when you should have gone down the road of another. So the best piece of advice there I can give overall is just surround yourself with the best group of professionals you can, and make sure that you have the black and white information to help you best make that decision. So let's talk about some of the specific options that are out there and that are available. One is the SBA disaster loan program, the economic injury disaster loan. And this was something that has been talked about now for a couple of weeks. In Arizona, I believe Governor Ducey signed that into effect, I want to say on the 16th or 17th of March. And basically, this is a program through the SBA. It's been around for a while. There were some changes made to it recently with the new legislation. But this same kind of program was used, for example, with hurricanes or other disasters that have occurred throughout the country. It is now applicable in all 50 states. And the basic premise behind it is that if there is an economic injury sustained as a result of what has happened with this pandemic, the business, again, may be eligible for loans at favorable terms. As of right now, it's up to $2 million. The interest rate is capped at 3.75%, and amortizations are up to 30 years. Now, the key here again is this is an underwritten loan. So just because one company is able to go out there and obtain a loan at X does not mean every company is going to obtain that. There are criteria. They are going to look at certain aspects of the business to understand what that business is eligible for, looking at cash flow, looking at ability to repay, etc. It may well be a very attractive program. Again, as I mentioned when we started, there is no silver bullet. So could the disaster loan be part of the answer? Maybe, but again, tread very cautiously. And as far as I know, not a single one of these loans has funded yet. These are through the SBA directly. So there's websites, or you can Google it. It's very easy to find where you go in and apply. It's a pretty onerous paperwork process. They're asking lots of questions. And from everything I'm hearing start to finish, expecting this to be about a 60-day process before those funds are obtained. So that's the EIDL program. The next one, which is really the one that's garnered a ton of buzz out of the recent legislation, President Trump on Friday signed into law the CARES Act, which included a whole host of different stimulus programs, but one of them being what's now become known as the Payment Protection Program, or PPP. The PPP is effectively really the intent of it, quite simply, as I read it, and just boiling it down very simply. The PPP is an attempt by the federal government to keep employees employed while these shelter-in-place orders and to some extent this halting of the economy is taking place. So I'm gonna boil down, and in this one even more so, there are lots of details still to be hammered out. I saw something about a half hour ago that there is a draft application or a sample application up on the SBA's site. Is that the final application? Until I see something that says final, I'm not led to believe that it is. But what we do know is this will be a much more streamlined process. The formula is, as we understand it, is basically 2.5 times an average month's payroll. And that can include both W-2 employees as well as 1099s, because there's certainly a lot of companies out there that might, maybe an HR resource that you're using on a 1099 basis, or certain roles, salespeople, contract workers. taking 2.5 times that total amount, and that is roughly the eligible loan amount that one would qualify for. A couple other important points about this, and then I'll flesh out a few things a little bit more, because this has also been talked about from the standpoint of loan forgiveness. And there is language in the law that the PPP is forgivable if the proceeds are used for payroll, rent, interest, utilities, those basic core functions to keep the lights on. 8 weeks worth of those expenses, if the funds received are used for those purposes, then you are then able to submit an application or a request to get the loan amount, again, the use of those proceeds, to be forgiven. Now, if you have money left over after those expenses are paid, that portion would likely roll into a loan and would continue on and be paid as normal. And exactly how they determine what, for example, fits into utilities, until we see guidance, that is unclear. So we'll talk about what to do with some of this. I'm just giving you some of the high-level pieces that we know right now. But also to point out on the forgiveness side, the forgiven debt is not taxable, which is another very important point. Oftentimes when you have debt forgiven, there can be a tax impact. So there would be no detrimental impact from that debt being forgiven. But again, ink's not dry. At a high level, we expect it to be an efficient program, a quick program. What I am hearing is that funds being available in a few weeks to a month. What that means, again, very open to interpretation. As far as I know, at the start of this webinar, applications could not be officially submitted. And one other point, I mentioned that the EIDL program funnels through the SBA. It's important to note that the payment protection program goes through your bank. And what I can tell you about this is banks are prioritizing existing customers first. So we'll talk about the importance of that relationship here in a few minutes. But this is definitely something, if you haven't already, you want to speak to your local banking contact about how they are handling this, because I fully expect, as it is a bank-driven program, some of the banks might have small tweaks in terms of how they collect certain information, some of the questions they ask, or their exact process for collecting that information. You want to know what the individualized answer is, depending on which bank you're operating with. So that's extremely important. The Main Street Business Lending Program. Now, this is one that's been talked about for a number of days. This is outside of the legislation, and this is actually a program through the Federal Reserve and the Treasury. Secretary of Treasury Mnuchin came out, and I've actually read multiple interviews with him, where this program is going to operate alongside these other loan programs. It will provide additional funds to small businesses. We don't know what that is yet. I think the encouraging thing is, and by all accounts, the Fed and the Treasury are using all the tools in their toolkit. There's no reason to believe they won't continue to do that. And putting a program out there with a name on it tells you that they are going to do something. We just don't know what it is, aside from the fact that it can run in parallel with other programs. So as more detail, that's something to pay attention to. They have called the program by name multiple times. You may have heard it. That's just something to keep a very close eye on as we go. And then also there's other grants and loan programs, lending options that have been discussed, floated about. We don't know. There's talks right now of phase 4 of the stimulus that could include additional funding for small businesses. All this is still very much up in the air. So the best thing, again, talk to your bank, pay attention, try to keep a good network of resources around you where you can get as many answers as possible as information changes, because in all likelihood, by the time we wrap today, there's going to be new information that might have changed some of what we're including in here right now. Now, one other point that I'll make about the disaster loan and the PPP, because this has been something that's been a topic of conversation and confusion. From what we understand today, as long as they are not used, as long as the funds are not used for the same purpose, you can have both an economic injury disaster loan and a payment protection program loan at the same time. Now, if you apply for both, you can't use an EIDL to pay payroll, But if you can demonstrate some sort of economic injury that qualifies through the disaster loan program and use those funds for another purpose, from everything that we have seen, you are able to use both programs at the same time. And in fact, as part of the CARES Act, as I mentioned, the Congress actually made some expansions and changes to the disaster loan program where they are wrapped in truly not completely independent. So something to watch. That's, again, a conversation to have with the lender, which we'll talk about here further in just one second. The other piece out of this, and I'd be remiss if I didn't say this, first off, definitely have conversations with your CPA. To the silver bullet conversation one more time, and I'm going to keep beating that over the head. Your CPA is going to have far more information on the exact tax specifics and how they impact each individual business. What we do know is a few of the finer points, and there are probably 9 or 10 different tax-related provisions that I was able to point out that have occurred out of the recent legislation. So I'm just going to touch on some of the biggies here right now that affect most businesses, but definitely have that conversation with your tax accountant to understand how this affects you and what choices you want to make. Because depending on tax situation, obviously looking at 2020 overall, those answers could be very different, and this is not a one-size-fits-all situation. First off, the filing extensions. This was an important piece that was actually released before the CARES Act. So the filing deadline has been extended from April 15th to July 15th. It has also pushed back the Q1 estimated filing. So basically, the federal government has given us a tax or an interest-free deferral on filing those payments, and should any payments be due, they're not due until July 15th. Now, certainly in a refund situation, you want to file that as quickly as possible. But if you do owe the IRS, you have a window with which to extend that. Now, interestingly, and I have not seen formal guidance on this, Q2 estimates as of right now are still due June 15th. That is likely to be pushed back as well. I can't imagine they're going to collect Q2 before Q1. So we'll have to see where the schedule for the rest of the year falls, but certainly buying a few more months of cash flow, again, in that same vein, to try to get us through this window of the real economic pain and on the other side of the curve. The second piece is there's a tax credit. So in situations where a lot of businesses have had to close, and there are some eligibility criteria around this, some specific eligibility criteria, again, talk to the CPA. The high-level points on it are it's 50% of wages up to $10,000 per employee can actually be applied against payroll taxes and actually get a credit against those taxes. So effectively 50% of 10,000, that means you can get a credit of 5,000 per employee. There's also a payroll tax deferral. So the 6.2%, the employer portion, and this also applies to self-employment tax as well, there actually is going to be an extension on that where it will not have to be paid, I believe, from March until December. Where that will not have to be paid. It gets paid half in 2021 and half in 2022. So this is another case where the federal government has provided small businesses a basically interest-free deferral on turning those monies over to the IRS. So those are a couple other things. There's a number of other tax provisions. As I mentioned, there's effects with depreciation, net operating losses, a whole host of other things that I'm not going to get into detail here. Other than to just say, definitely speak with your CPA if it's applicable, and find out what the best course of action is. They should have the full menu. And again, some of this guidance is I'm understanding, even on the tax side, the ink is not 100% dry yet on that either. Suffice it to say, with the legislation, with the things that have occurred, there are a whole menu of options that the federal government, Treasury, Federal Reserve have put in the toolkit to try and use to stem the economic impact for so many businesses from this pandemic situation. So let me switch over to lenders for a few moments. And this, again, we in the perch we sit, we get a bird's eye view of a lot of this, and have already seen, with the rapid impact that the COVID pandemic has had. The one thing I will tell you is banks have jumped into action incredibly quickly, admirably. I have been so encouraged by what I have seen. Because again, going back, and for those of us who are well into our careers during the Great Recession, a lot of banks were unhealthy at the time and were not necessarily able to jump in and help, or were scared to help in certain ways. What I have seen out of banks, I am so encouraged by, and I think it's going to be a very key element to help us get through what is going on right now. That being said, they weren't set up necessarily for this either. So banks are gearing up for things like this PPP program that was all of a sudden going to have a flood of applications coming into them. I know they're gearing up, they're staffing up. They don't have all the information either. And they are doing their best. So there's an element of a little bit of patience, but again, a good lending relationship, being able to have some of that good back and forth dialogue. And what I would encourage you is just get close to them, stay close, and listen a lot. I've noticed a lot of banks have gone to more bulk communications in certain instances to try to put together an FAQ of sorts to answer so many questions in one shot. But they are on the front lines of this. Certainly, I think we are all very fortunate to have them as partners on the front lines of this. And the other thing that I can tell you that we've seen is, I would encourage trying to make their jobs as easy as possible. And what I mean by that is this. This is a challenging time for a lot of businesses. I've already seen it in just working through certain situations. Customers that are going to their bank with a proactive plan, that are thinking about potential implications, that are going to their banks in partnership, and let's all work together to come up with a solution. Because there are certainly businesses, I've seen many of them, that got hit over the head and knocked down by a 2x4 out of left field, very, very rapidly. That's not something that anyone is necessarily prepared for, and certainly in mass. So putting a plan together, getting yourself, having a organized set of answers, set of information, and what it might look like to get out of some of this, that is essential. And the other thing it does, and I can tell you this from seeing it, it will put you more towards the front of the line. I can virtually guarantee you that if a bank has two options, one of them is someone going on their doorstep and saying, here are my problems, I need you to help me fix it, versus the other who's actually got a cash flow plan thought out that they can put in front of, go through their banker and say, okay, I'm pinched in this area, looks like 90, 120 days, I'm going to be here, let's talk about potential solutions. And again, the PPP plays a part in that. There's other conversations with the banks, and certainly, again, there are companies out there that cannot make their loan payments right now. There are companies out there that have already cut payroll. There are companies out there that have already taken some very drastic measures. But that communication is what's key, and we've seen it work very, very well and very effectively, and that partnership is going to prove even more valuable on the other side of this. The other thing I would say, and this goes into just the myriad of options that are out there, is bear in mind that the banks are still going to look at the whole picture. Banks are still here to make sound business decisions, no different than any other business, yours, mine, or any other. So they are going to look at that whole picture. Now, even if this PPP program is a fast-track lending program, which we expect it to be, a company that just goes out and levers themselves, let's say you're able to get, an economic injury loan from the SBA, but you have other bank debt. Understanding what the potential implications of that are. Could that affect a renewal late this year? Trying as much as possible to look at that whole picture, have that conversation around the whole picture, and get out ahead of some of those things. Maybe there's an upcoming covenant, some other implications. The importance of just staying on top of that is paramount. And then I think the other thing that I'll point out, and we're going to talk about the rebound here at the end, but I use the analogy that for a lot of companies with what they're doing right now, and obviously anyone who's even had some degree of impact from this pandemic, is probably stretching out payables. So maybe there are just some flat out cuts. Maybe there are some other things that are not being paid as promptly, and that could be any host of expenses. So what I like to call that is a snowball. And by doing that, you've essentially got this snowball that is building. And it's going to build over the course of however long it takes for a business to recover from this. But the key is having an understanding of how that snowball gets melted. Because if all we're doing is setting up this big snowball that we're pushing up a mountain until that snowball gets so big it starts rolling back down the hill at us, might have avoided the initial issue, but we're going to get killed shortly thereafter. So critically important to look at debt levels, look at future profitability, looking at future cash flow, and again, having that conversation around what it looks like to melt that snowball. Because what I can tell you, if there is some conversation, for example, going to a bank and can we stretch out an amortization, for example, of this loan, or can I get a little bit more proceeds here, or maybe can I push the advance on my line of credit? If the bank doesn't see an ability to repay that back, to melt that snowball, your odds of getting that done are very slim. So very important piece to think both very short term as well as at least a little bit longer term to really maximize success with lenders. So what are options, what to do? We'll wrap this up, and I think these are really some key takeaways that I'll leave you with. And I think I'll put them primarily in two buckets. And the first piece is really cash. I think first and foremost, and really I would say get it down on paper. I've seen CEOs who can do it in their head, but getting it down on paper, allowing you to move pieces around, I think is critically important. What do you have? How far does it get you? What does that picture really look like? And then moving some pieces around, and what does that picture look like if, let's say the shelter in place orders go another 15 days? What does that do? Looking at all available capital. Now, this may be something for a lot of companies they've already done, but looking at all sources of capital, and that could be extending payables. That could be making some further cuts. That could be, looking at are there other options with line of credit, other access to capital, investors. Would investors potentially, do some bridge financing? Again, assuming they can see that there's a sunny outlook on the other side. Looking at it and really exhausting all options so that you have a sense of what all you have in your war chest to work with. And then looking at scenarios and planning accordingly. It's certainly important to get a sense of what that worst case scenario looks like, because the last thing you want to do is put together a plan, have something go sideways, and then realize all the work you put into that plan has now gone out the window. So looking at that worst case, definitely advisable, but then maybe is there a more measured option? And looking at some different scenarios, what does that look like? And it's not key just to have that to be sitting on a piece of paper so you can flick back and look at it. But equally as important that you then know what actions to take based on which scenario you're operating toward. So could it be, and again, thinking towards recovery, could it be that, if you start seeing that actually cash flow is in a little bit better position, is it maybe that you cut a little less payroll, knowing that you can operate quicker when that rebound comes back into play? Or if things are leaning a little bit worse, do you then have to institute phase 2 of your cuts? Having those scenarios and then knowing what decisions you're going to make depending on which scenario plays out, that's really critical, and now is key a time as ever to be nimble. And then I brought this up, but I'm going to stress it again: regular communication with your lenders. If they don't already know you on a regular basis, they need to. And again, this theme of partnership, I've seen it. It is so encouraging, and certainly here in Arizona where I am, to see how this community in general is rallying together. It's really been a pleasure to watch in a very different time. And I really think this has brought out the best of us in business and the best of us in humanity. But keep your lender informed, keep them up to speed on what's going on, get them the information that they need, and work together to craft a solution based on what the results of what I mentioned on cash are telling them. And then from an overall business planning perspective, so I brought up banks, but just the power of relationships in general. We talked about, certainly your tax accountant, your CPA. Who else out there can you leverage? Who do you need on your team right now? Maybe it's an advisory board member that you only talk to twice a year. Maybe it's somebody in a peer group who's been through some of these things. It may be brain power, it may be horsepower, it may be both. But who do you need on your team that can help you and bring some extra value to your organization? Another key piece is, and this goes again to that one size fits all solution not being the case, there's going to be a lot of different industry impact out of this. Some businesses are going to rebound much quicker. Some businesses are going to be a little bit more prolonged, like aerospace, as I mentioned. Understanding the industry impact and looking at the trickle down effects, what's happening within supply chain, what is happening with your customers. If your customers are feeling more pain, even though you're able to come out of things quickly, that could still lead to a prolonged cycle. So really understanding what that impact is, the industry and the players within the industry, is going to give you much better visibility into how to plan, how to make decisions, and what that outlook is going to be going forward. It's also a great opportunity to be nimble. And I've seen a number of businesses, for example, in the healthcare space have quickly spun up telemedicine, operations. We've seen what a lot of restaurants have done, getting very creative, where some of them were very much on the front end of going to drive-through or to carry-out options, delivery options, and even selling bulk products. There's a lot of other businesses that have gotten very, very creative with how to operate during this time. And what other options might be out there? Are there some other options to leverage low-cost technology? Are there other options to reach customers? Certainly if you're in a case where things have largely, dried up to some extent from a standpoint of new business, this may be an opportunity to get together and huddle with your team and start brainstorming on what are some other potential pivots. And again, we're not talking dive in head first, but some other pivots that might be worth exploring, some other business opportunities that could be out there, because in times like this, there's often no better time to think about those kinds of things. And getting back to the culling of the herd, this is going to be an opportunity to come out of this, win some market share, take the place of some former competitors, and really be a valued time in that regard. Decisions and clarity. This is not the time to be making huge strategic decisions by and large. A big new hire, new initiatives, unless it's really something that's complementary of the situation. Transactions. I mean, there are certainly some instances where a big acquisition may be taking place, or a sale, and there may still be good reason for that to go forward. But by and large, this is not the time to be making real big, bold moves. You want to be doing that when the dust has settled a little bit. And then I think another piece, and this is again a great thing out of the entrepreneurial community. What does that lean organization look like? And this is a muscle that all entrepreneurs have when they first are getting up and going, in that a lot of people are wearing a lot of different hats. There aren't a lot of luxuries, and the company is used to operating very lean. This, fortunately or unfortunately, is going to be an opportunity to reuse a lot of those muscles, and getting back to oftentimes how the business was built to begin with. So that maybe some businesses are evaluating, is it layoffs? Is it cutting hours? What does that lean operation look like going forward? And it may, unfortunately, nobody wanted this to happen, but it may actually end up that a lot of companies are healthier after having gone through this, and that they're building up, in a very smart way, in a very measured way. So really peeling back the onion and seeing what does, and that's a question that I would ask any business right now, is just what does the lean version of this company look like, and how far does it get you? And then the last piece, and I think this is one of the most important parts of the conversation overall, is the rebound. We know it's coming. You can poll just about any economist out there, and they will tell you there is a rebound on the horizon. What we don't know is the timing, how aggressive, but it certainly looks like the U.S. economy is going to snap back from this in quite a strong way. The important part of that is be ready for it. And there has been a lot of opportunity that has been lost and missed because companies were not ready for that rebound when it came. Certainly we saw tremendous wealth creation in a lot of companies coming out of the Great Recession because they were ready. And that may be gobbling up smaller competitors. That may be taking the place where competitors went out of business or could not be as nimble, could not respond. Or maybe even competitors that just earn a bad reputation through processes like this. There is going to be tremendous opportunity. Be ready. What's your ability to flex up, as that rebound starts to take shape, and position yourself as best you can with the ability to take advantage of those opportunities. we talk about a lot, and one of the terms we use, again, in critical situations like this, don't survive today to die tomorrow. And one of the worst times, nobody on this call lived through it, but the greatest wealth creation in the history of the world was after the Great Depression. There will be good that comes out of this. There will be tremendous opportunities that comes out of this. We're all certainly going to look back in the history books, but that rebound is coming, and I think being smart, being ready for it, and having a plan for today and tomorrow, and those can run in tandem. It's brutal out there. We're living it and feeling it every day. But the American entrepreneur has a very robust spirit, and it will take a lot more than that to keep them down. So with that, you've got a chat bar in your screen. I would go ahead and invite you, submit some questions. I know I got a couple things ahead of time that I tried to address some of those topics, and there are some things that just, again, the level of detail is such that I would talk to CPAs, talk to banks directly, or see where some of this information comes out. But any questions that anyone has, go ahead and submit those in the chat bar, and we'll get through as many as we can here before we wrap. And while we're waiting for some questions to come through as well, what I will do is, if there are any immediate updates to some of the information we covered today, we'll go ahead and distribute some of that information to the attendee list that's on the call here. For example, if that application that came across from the FBA or from the SBA is a valid application, that's the one to use. We'll certainly point that out. But just pay as close attention as you can, and don't necessarily believe everything you read. So first question coming through about anyone who has been funded by any of these initiatives yet. The simple answer there is I am not aware of anybody. I don't think any of us at the firm are. The SBA, the EIDL program was just released a couple of weeks ago to most of the U.S., and those have not yet funded. The PPP is not yet funded. There is a provision that was added to the economic injury disaster loans that allows for I believe a $10,000 advance. And some of those may have been funded, kind of an emergency advance, but beyond that, not aware of any specifics that have been funded yet. And that is, again, that's the cautionary tale, is until we start seeing the ink dry, some proof in the pudding, it is very, very hard to tell how exactly some of this is going to play out. So we're all playing a little bit of a guessing game. But more information comes out by the day, and I will tell you, I have been impressed by the speed with which the SBA has actually moved already, just in terms of getting what little guidance they have out. And there are banks. The other thing I will say, your bank may already have a list of information they want to see. They very likely do. I've seen a few, but it's going to be specific bank by bank. So just because a company in your peer group got one list does not mean that it's going to match what occurs at another bank. Other questions? Just go ahead and submit those through the chat bar. Any banks being more connected than any other? No, the key there, I would say, is as it relates certainly to the PPP loans. You want to make sure that your bank is an SBA preferred lender. So if they are not, they may not be as well versed on this program, and they may not be able to respond as quickly and efficiently. Most of the brand name banks have access, but that is a very good question to ask, is, are they SBA preferred? And the other way you can tell is just ask what information they have and they have available. I mean, I've already seen a number of banks put together very, very polished material in a very short period of time. So I think they're trying to get out of it as best they can, and maybe a real small bank with limited resources might not have all the answers, but a lot of them do. Using a different bank rather than your current bank for some of this. So that's a great question. What I have heard from all the banks that I've spoken to, and that is many, is that they are prioritizing existing customers first. So this is probably not something that you want to go bank shopping right now to try to forge a new relationship. And that's really important for two reasons. Number one, it's just easier for the bank. And then number two, the good news is the bank, probably has a relationship with you already where you're not educating them on everything out of the gate. So I would definitely start with current bank, and that guidance has really already been put out. So that's very important. As far as terminating employees, and this is a tough one. This is certainly a time, and we've seen a lot of companies do it. I had a conversation with a CEO last week where, he had some C players that they were keeping around, and quite frankly, they just couldn't afford to keep them around any longer. There is going to be risk out of this, in terms of some of the terminations. There's going to be unhappy people. I think that is unfortunately an inevitable part, and I'm sure we all know, aggressive labor attorneys on the other side that are going to file some claims for various things. There's not a great answer for that right now. And I have not seen anything yet that affords the employer any additional protection in that regard. Question about other loans. So the best thing that I can say based on what we understand today is both the SBA, the Fed, the SBA, the Fed, and the Treasury all understand, as well as banks, that a lot of companies already have financing out there. It should not matter as much because they have designed these programs to really tack on to or to be complementary with what's already in place. So the type of financing that you may have is less important. What's going to be more important is really the terms of that financing and how it plays in with everything else. So, for example, I brought up how the EIDLs are really underwritten, that if, applying for an amount that the company doesn't have the ability to cash flow, that's going to pose an issue. But just whether it's an SBA, a conventional, whether it's a term loan, whether it's a line of credit, I have not seen anything yet that shows the actual type of loan, structure of loan matters in any way. So as far as banks calling loans, it's hard to say, and I don't think that's another case where the ink hasn't dried yet. The expectation thus far is that, as I said, banks have been very, very complimentary, easy to deal with, and that has been extremely encouraging. I expect that trend to continue, and I think they're in a much better place to do that and address that now. So I think, from what I've seen, banks are going to do everything they can to make sure that that they're able to keep loans. Now, this year with this happening, I mean, there's going to be all sorts of covenant violations and there's a whole other shoe to drop with the way some loans were structured prior to this, and the dust is far from settled on that. But not expecting any aggressive behavior by banks right now, unless there really are egregious situations. Everything we've seen thus far has been very very partner oriented. Red flags about delaying tax filings. The only way that, just thinking through some potential impacts of that, because this is going to be so common, you have to start thinking about who the potential, statutory requirers are, things like that. Your bank may require tax returns. You may need a tax return if you're going to get a home mortgage. That's really a kind of a personal case-by-case basis, depending on who needs it. For the individual, if you're paying money to the IRS and you want to defer that interest-free for a while, it does not seem like there's a lot of downside in that. Existing SBA. Okay, so question on whether having an existing SBA loan would actually be an advantage. It's unclear. It does not look like it would necessarily be an advantage. Again, the advantage would be if that loan was done with a lender that you still have a good relationship with. So they already know you, they've been getting updated information. But SBA versus conventional, it does not seem to make a big difference, even though these are either programmed directly through the SBA or a program backed by the SBA. Okay, so a question about U.S. loans in regards to international companies. So this is, and again, I'm going to couch this. My understanding is this applies to all company payroll, and there are certainly companies that have international payroll on staff. Have not seen anything that says that those employees would be ineligible. The only caveat that we've seen on employees, there is a limitation on the PPP that it's capped at $100,000 per employee. So any real high-paid employees, would not necessarily qualify. But nothing I have seen would exclude if the company had employees in other countries. There's the cap of the $100,000, and then I should have brought this up earlier as well. From what we understand as well, this also includes, can include compensation to the owner. So depending on how that's occurring, in some cases owners are on W-2, in some cases they're getting draws, guaranteed payments. But again, what I understand at this point is that's capped at $100,000 annually, but those are all still eligible. So maybe we'll take just one or two quick questions, and then we'll wrap up here for the day. Or maybe not. But a lot of these questions relative to, and even a lot of what I brought up, I mean, your three best friends through this process: lender, CPA, and attorney. Those three folks are going to have a lot of information, and certainly as things get more and more crystallized, a lot more information that's going to help you answer some of these very challenging questions. And going back to what makes sense for each individual business, because the answers are going to vary. We're having conversations right now with multiple companies, and the solution, potentially looks very, very different. So it's strategizing what's the best solution for each company, and then working together in partnership with all those providers to try and achieve it. Well, I think we're right on time, so I think we will go ahead and wrap. Thank you all for taking the time today. Hopefully this was informative for you. It is a real challenge, and one of the most difficult things we've had to deal with is just the rapid flow of information, trying to stay on top of all of it, and then trying to relay and weed through a lot of that, and pass on as much proactive information as we can, back to friends of the firm. So hope this was helpful. Depending on what happens, we may do a follow-up down the road. But thank you all for taking the time, and we'll talk to you soon. Stay safe, stay strong. Bye-bye.